Good morning to everyone. The subject personal investment management. I am Vinay Matsi, the assistant professor, Department of Commerce, Sri Venkatarama Swami College, Bandipal. So this is the topic which is discussed earlier, stock market. Especially in the stock market, we are going to face the number of problems as a investor. We have faced the risk like systematic risk, unsystematic risk, like that. So that is the topic which is discussed earlier. So today we are going to concentrate on the topic on investor protection. Really, it is very important to protect the investor because the investor is putting the investments without knowing the market. Okay, he maybe lakhs, his money in the form of thousands, lakh, etc. So investors are the pillar of the financial and securities market. So they determine the level of activity in the market. So the market which is ready for only for the investors, it is running only in the name of investors. Without investors, there is no stock market. So in the stock market, we are going to give much more importance, and also we say they are the pillar of the entire financial and security market. They are in the form of shareholders. Okay, they are buying the shares, they are buying the debenture, they are buying the mutual fund, they are buying the equity shares, like that. So they are in any one of the investments they are doing. So that's why the investors are the pillars of this market. They determine the level of activity in the market. They put the money in funds. Always the money in the form of funds, the money in the form of stocks to help to grow the market, and does. So the savings is always essential for each and every individual. So that savings in the form of investment, that becomes very good. So investments is in stock market also. Okay, that investment that helps to increase the market. That means that develop the stock market, and also it is develop the entire economy. It is very important to protect the investors of the it is very important to protect the interest of the investors, especially the Security and Exchange Board of India. So this is the SEBI, the board which is regulate the entire stock market in India, is responsible for the regulations of the mutual funds, and also they safeguard the interest of the investors. Okay, there is a few instruction which is very essential for the investors, because the investors they are putting the money blindly. And I am not telling that 100% of the people they are blindly they are investing. At least a few of persons they doesn't know about the stock market. So that's why the regulation which is always required for those type of investors. So this SEBI they provide the measures towards the protection of the investors and safeguard the investors from the malpractice in sales. So somewhere some type of malpractice may be in stock market. Somebody misleading you, and they saying that you are going to buy these shares. The price of these shares may be increasing, like that they are saying. So without having any proof they are telling. So you are following whatever he says. So that is one type of misleading of the investors. So that type of malpractice. So malpractice may be. So some company may not be existing, and the value of those shares may be the zero, and you are insist them to buy those shares. The price of those shares may be increasing. So that type of malpractice may be. So malpractice in shares should be avoided. So the SEBI is going to provide the guidelines, and it is also provide the measures towards the protections of those investors. So it has published the various derivatives, driven by investor awareness program, set up investor protection fund to compensate the investor. So what the SEBI is going to do in case of this type of practice, that means malpractice which is happens in stock market. So the SEBI it is taking a responsibility. So he is going to provide some type of program which is helpful to the investors. That means the program in the form of awareness program, and also the SEBI is going to set up the investor protection fund. So IPF, it is a one type of procedure which is followed by each and every company, and the each and every company, whatever the money which is taken in the form of applications of shares, that the entire money will be given to the government. Okay, that money is called as a investor protection fund. Okay, so that money which is used at the time of the type of problem faced by the investor. So anyway, that means compensation will be getting through the IPF fund by the investors. The measures are as follows. Let us discuss one by one. What are those measures having by this SEBI? Stock exchange and the other securities market business regulation, registering and regulating the intermediaries of the business like brokers, agents, bankers, trustees, registrars, portfolio managers, investment consultant, merchant bankers, etc. So registration, it is always essential. So according to SEBI, the registration and as well as the regulation, that means regulating the entire intermediaries, whoever may be, the person who is a broker, the person who is a agent, the person who is a banker, trustee, registrar, portfolio manager, investment consultant, wherever may be. So he is a part of this trading. Okay, so that person should be compulsorily registering. Okay, that is the first step which is taken by SEBI. The second one is recording and monitoring the work of custodians, depositors, participants, foreign investor, credit rating agency, etc. Even though, so the recording and monitoring, it is also the one of the step which is taken by SEBI. So okay, they monitoring the entire activities of the custodian, depositors activity, participant activities, foreign investors, credit rating agency. These are the type of institution as a part of stock market. Okay, so the monitoring and also the recording, it is the one type of protection which is taken by SEBI in the form of investor protection. Registering the investment schemes like mutual fund, venture capital fund, and regulating their functioning. So even though the other type of funds like mutual funds, okay, that mutual fund provided by the company is going to registering. Okay, so the investment schemes which is registered under SEBI Act. Next, the promotion and controlling of self-regulatory companies. So those who are the companies, they are regulating themselves. They are having their own policies and procedure towards the investment. So the promotion and controlling of self-regulatory companies is also having by the guidelines in case of by the SEBI. Keeping a check on frauds and unfair trading methods relating to the securities market. So always some new fraud and new type of misappropriation maybe happens. Okay, that type of fraud should be reduced. So the SEBI is going to ban, the SEBI is going to avoid those type of unfair trading methods by checking regularly. So another one is observing and regulating the major transaction and takeover of the companies, and carry out the investor awareness and education program. So this is also the one of the function done by the SEBI, that always is going to measure and observing the major transaction. That is the big company is going to took over the other company, a merger or other type of takeover which is happening in the economy. So the observation is doing by the SEBI in case of companies. Train the intermediaries of the business. The training which is always essential, because some money is going to be invested by the investors. That money will be using by those intermediaries for the purpose of alternative investments. That means portfolio investment is going to do by the managers. They are the part of the intermediaries. that they need training. Okay, day to day the new schemes may came to the market. Okay, the basic information and also the specific information which is required towards the portfolio investments. So that's why train the intermediaries of the business, it is a part of functions of SEBI. The inspecting and auditing the security exchange and intermediaries. So always check up verification, auditing, it is a part of the functions of SEBI. Move on to the next topic. So what are those fund that SEBI is going to says to have this type of fund? The first one is Investor Education Protection Fund. So investor protection measures by SEBI so include setting up of a fund called Investor Education and Protection Fund. The company which has completed 7 years in the business, so they should hand over all the unclaimed fund dividends, mature deposits, debenture, share application money, etc. to the government through IEPF. So this is the one of the regulation having by the SEBI, that the company who is completed so the 7 years, so they need to submit their funds in the form of mature deposit or in the form of application money, or it may be in the form of unclaimed fund dividend. So that type of fund should be transferred to the government. So the another investor protection fund, it is set up by the Interconnected Stock Exchange in accordance with the guidelines issued by Ministry of Finance for investor protection, in order to compensate the claims of the investor against the members of exchange who have defaulted, failed to pay. So the investor can ask for the compensation if a if a member of the National Stock Exchange or the BSE or other exchange fails to pay the due money for the investment made. The stock exchange have put certain limits on the level of compensation paid to the investor. So I told us this type of fund which is used, that the members of BSE or members of NSE, if they are making any fraud toward this type of investments, this fund which is used for the purpose of compensation. So there is another activity, so in the form of measurement, that is investor awareness program. It is always essential if you are aware about this type of program, and you may learn a few things about the market. So what type of transaction which is taken place, whatever the new schemes which is came to market, so how to deal with those market, what are the problem you are going to face, and that means whatever the risk you are having towards that investments. So that is the awareness. So investor awareness program is going to be conducted by SEBI. An informed investor is a safe investor. So the SEBI is thinking, and always it says that an informed investor is a safe investor. So before you are investing, you should learn about the market, and you should aware about the market. So what problem you are going to face? Is it is a systematic risk, or is it a unsystematic risk? Whatever you are having. So that is the awareness. So that awareness should be provided through conducting the program. Okay, so here in this program you are going to educate and create the awareness among the investor, and also the program covered major subjects like portfolio management, mutual fund, tax provisions, investor protection fund, investor grievance redressal system of SEBI, and also the workshop towards the derivatives, stock exchange trade, Sensex, etc. So SEBI has marked the investor awareness program across all the formats like print media, radio, television, and also internet also. So the Association of Mutual Funds in India. So see, the association, it was set up to regulate all those who sell mutual fund in India. So it is required to solicit the mutual funds, and it regulates the member of the association in order to protect the investor from any kind of mis-selling or unfair investment practice. Okay, these are the very few different types of funds which is used toward the protections of investors. Thank you for listening.